Hey, what's going on, guys? It's the Crypto Siege with another day in the life and the crazy life that is the digital asset space. What is going on, guys? Good to see you. It is the Crypto Siege with another day in the life and the crazy life that is the digital asset space. Good morning. Happy Saturday to you. Hope you're excited. Hope you got your head up and your shoulders back because you're an early adopter in this new asset class and a new asset class that is the digital asset space. You, my friends, are winning. You're playing a game that 99.99% of the masses don't even know is being played. And you're winning. How cool is that? So woke up this morning a little later than normal than I usually do and thought, what do I do? What do I share this morning? And shoot, I tell you, I was going around checking on some different news things. And then I came across Mickey B. Fresh. Holy moly. He shared something that I am going to share with you guys because I got to tell you, it's really interesting stuff. You know, on this channel, we talk all the time about Executive Order 13772, which the President Trump signed about a new financial system where it mentions the company Ripple. So I found this from Mickey B. Fresh. I found this little thread. I'm going to share this with you. There is a video or two in here as well. And so, by the way, I got an appointment at 11 o'clock Eastern time. So I got about 30 minutes to kind of go through some stuff. But again, you know, we all know Mickey B. Fresh is a guy who continues to add value to the community every single day, who takes his valuable time, right, resources and energy to add to the community. You know, just what's the word I want to say? Just very unselfish, right? In a selfless manner, this guy is sharing. And so it's very, very cool when you have people like that in the community. So Mickey B. Fresh, thank you, brother. We appreciate you big time. So let's start from the beginning here. Recently released interview of Craig Phillips from the CFTC when he was at the CFTC, breaking down the Executive Order 13772, ordering the Treasury Department to research non-bank fintechs. Craig Phillips is now on Ripple's board of directors. After speaking with 232 industry stakeholders at the Treasury, question, why did he choose Ripple? Or why would he choose Ripple? Right? The dude could go just about anywhere he wanted to go. Why did he choose to be on the board at Ripple? It's got to make you think. It got to make you wonder. So let's see here. Let's see how long this interview is. Wait a minute. 23 minutes. Let's see.
Welcome to CFTC Talks. I'm your host, Andy Bush, Chief Market Intelligence Officer for the CFTC. Hey, just a quick reminder, as always, there's a disclaimer at the end of the show that's important for you to listen to. Today, we have a very special guest from the U.S. Treasury Department. Joining us today is Counselor to the Secretary of the U.S. Department of Treasury, Craig Phillips. Mr. Phillips joined the Treasury in January of 2017 and assists the Secretary in a wide range of matters, including domestic finance, domestic financial institution policy, housing finance, and regulatory reform. From 2008 to 2017, Mr. Phillips served as a managing director and member of the Global Operating Committee of BlackRock, Inc. Mr. Phillips was the global head of the Financial Markets Advisory Group in BlackRock Solutions, which provided analytical and risk consulting services to a wide range of private and public sector organizations.
And by the way, I believe BlackRock to be the largest assets under management company, investment firm, if you will, out there. This dude was managing director of BlackRock.
Globally. He has been instrumental in many issues at the Treasury, but one of the areas that doesn't get enough attention is the work on the regulatory reform being done under his watch. To that end, there are several reports out from the U.S. Treasury on policy issues, on the policy issues website page under regulatory reform that are worth reviewing and reading. truly. Now, these reports are essentially tutorials on the U.S. financial system, problems within that sector, and what to do to fix them. And really, for everyone in finance, they're just an amazing resource, and I would recommend them to be distributed to all of those who are entering into this field. And today, we're so pleased to have Craig on to discuss the latest release of a report entitled Non-Bank Financials, FinTech, and Innovation Report. Counselor Phillips, welcome to CFTC Talks.
Well, Andy, thank you for those kind words. We have a great policy team at Treasury that we've worked on the reports, and we're glad to share our thoughts with you further today.
Well, thank you. To start out, I think it might be a good idea to level set our discussion, Craig. So can you tell us about the executive order that led to this series of reports?
Yeah, President Trump established the core principles for the regulation of the financial system in his executive order that he issued in February of 2017. That order directed the Treasury, under the direction of Secretary Mnuchin, to identify laws, regulations, guidance, reporting, and other requirements or policies that inhibit the federal regulation of the U.S. financial system in a manner consistent with those core principles. These core principles really are fundamental values, such as empowering Americans to make independent financial decisions, avoiding taxpayer-funded bailouts, and fostering economic growth and vibrant financial markets through rigorous regulatory impact analysis. But they also identify the importance of allowing our American companies to be competitive with foreign firms in both domestic and foreign markets. This includes assessing how we engage.
Allowing our American firms to be competitive against foreign firms. Oh, goodness.
In international financial regulatory negotiations and forums. And finally, the principle of making regulation more efficient, effective, and appropriately tailored stands out to me. It's an important step in restoring public accountability of the financial regulatory agencies and rationalizing the federal financial regulatory framework. So we approach this task by doing extensive outreach to market participants, as well as substantive research on regulations and underlying analysis. We decided ultimately to partition the work to properly cover every segment of the financial system in sufficient detail, which resulted in a total of 4 reports. We covered banks and credit unions, a sector highly impacted by the Dodd-Frank Act, in a report issued in June of 2017. We covered the capital markets in a report issued in October 2017. That same month, we issued a report covering asset management and insurance. This latest report, issued just last month in July 2018, covers non-bank financials, fintech, and innovation. For the fintech report, we met with or received submissions from over 232 parties that shows just how broad-based this topic is. We personally believe that it was impossible to truly understand the impact of regulation and the potential for alternative approaches without engaging extensively with market participants, which we've done throughout the series. The final report has over 81 discrete recommendations, all of which we think are focused on in improving the financial economy as per the core principles.
Well, let's take a step back here and look at the big picture, since you kind of brought it up. I guess the question I have is, why did Treasury decide to dedicate a report to non-bank financials, fintech, and innovation?
Well, through our work, we consistently heard that enabling innovation in the financial services sector is of critical importance. So innovation, in many respects, is driven by new technologies and the constantly expanding uses for data.
Whoa, and the constantly expanding uses for data. Guys, I just think it's hugely important to understand. We've always said on this channel, this administration has a plan. We believe Ripple is involved in that plan. Is it plan A? Don't know. Is it plan C? We don't know. But there is, in my opinion, zero chance that this current administration is going to let a United States firm like Ripple, with its breakthrough technology, be shouted from the rooftops in Southeast Asia, Japan, Korea, Thailand, Singapore, shouted from the laptops from places in Mexico and Brazil and Peru, India and Italy. And the United States is just going to let that slip through their hands and not leverage this technology? Clearly, it is numero uno. It's not even close in cross-border payments. Clearly, it has been working with the regulators since day one. You're telling me that this current administration is going to let the opportunity to sing the praises of a good old US of A company that created the ILP and gifted it to the W3C, the organization, entity responsible for the internet, created the XRPL ledger that can move anything of value. And not only can it keep it a record, has not had a single error on the ledger. Not only can it provide transparency, but it's efficient and it's cost effective, absolutely inexpensive. Not only can it change the game in the number one financial system there is, such as the banking system, it can change the game there. And this current administration is just going to let it slipped through its fingers. They're not going to bring up the fact that he put together this executive order 13772 to allow companies like Ripple, Uphold, Robinhood, Coinbase, and the likes to succeed. They're not going to bring that up. Mnuchin's not going to bring that up. Yeah, I don't think so. I don't think there's a zero chance they're going to let that slip by. Zero chance.
Given the increasing reliance by consumers and businesses on mobile applications, technology is likely to drive nearly every aspect of innovation and financial services. We believe regulators must participate in a public-private effort to understand and explore the drivers of these changes. So it's important to explore this topic and that background is an important part of the FinTech report. We also found that regulations that arose since the financial crisis, particularly the Dodd-Frank Act, resulted in large segments of the financial services migrating from the banking system to non-bank financials. So exploring that trend itself was quite important. And finally, a large amount of innovation is occurring at fintechs. We define fintechs as independent companies providing some element of products, services, or technologies relevant to the financial services sector. How we license and regulate these companies is important, a topic that we explore in this report. At the same time, many of these companies provide services to and partner with mature financial institutions, a trend that Treasury very much supports. These partnerships and interactions require potential modifications and enhancements to a variety of regulatory principles and guidance. For all these reasons, doing the FinTech report became a very high priority.
Yeah, that makes a lot of sense. I guess my next question is, so if that's the background on this thing, what are the major themes in the Treasury's findings in the report?
Well, one of the overarching themes is that, first of all, innovation is incredibly important. For the U.S. to be and remain as competitive as we are, we must innovate. The second is the economy is increasingly digitized. Combined with increased connectivity of mobile devices, there's an opportunity to truly revolutionize the delivery system for financial services. And finally, there's a tremendous amount of capital in technology and fintech chasing this opportunity. This is in startups, but it's also in extremely large global telecom and other data providers. So it's an area for the U.S. to have a tremendous competitive advantage. I would kind of categorize our findings in four different ways. First, we advocate for a regulatory approach that makes better use of consumer data and financial services, such as enabling credit decisions. This should be adopted in a way to both protect consumers and also assure that they have choice in these matters. Examples are how data aggregators collect data from financial institutions once that's approved by consumers to give a quicker snapshot as a basis of a credit decision. A more detailed example is how lenders access IRS records also approved by consumers and make those available to lenders. The second category is we recommend combating regulatory fragmentation and overlap, both at the federal and state level. This has been a consistent theme throughout our reports per the work on the core principles. Treasury supports the OCC's effort to launch a special purpose national bank charter for fintechs. We also recommend efforts to harmonize state regulations through better.
So this was in 2018, and the Treasury supports such a move back in 2018. Interesting. This is before Brian Brooks was over there. Interesting.
Coordination. This could take the form of a model law, for instance. Another example of coordination are efforts around the nationwide multi-state licensing system to reduce duplicative regulatory requirements and promote greater information sharing and coordination.
So again, if I'm hearing that correctly, the Treasury supports the OCC's move for this bank charter thing that Brian Brooks came out in 2020 with. But remember, this was in 2018 when this interview was being done. So again, the current administration's, well, let's put it this way, the Treasury's actions directed by this current administration had to put someone in place who believes at the OCC, who believes in this particular non-bank fintech innovation. They had to find the right guy, if you will. We've been saying this on this channel that it feels like all the people are in the right spots, in the right places. Just have to be paying attention to it. Now, again, guys, it's so very, very important to understand. Just because you and I know doesn't mean that the masses know. The masses they're not even paying attention to what's going on. Do you think the masses know about a global financial reset? They don't. You think they know about the fact that the current administration wants to go back to, would like to go back to the gold standard? You think they know who Judy Shelton, Brian Brooks is? Yeah, I don't think so. You and I know because we're early to this game. We're paying attention. We're leveling up our XRP IQ, our digital asset space IQ, and our financial space IQ. This is how we know.
The third area is across the non-bank financial sector, a number of activity-based regulations have become outdated in light of technological advances. These are market segments such as loan origination and lending, loan servicing, debt collection.
Whoa, loan origination, servicing, debt. Whoa, how about that? Again, 2018 is important to understand. He is saying that recognize that these things are outdated. The current, back in 2018, they've been outdated. You ever wonder why Ripple all of a sudden just out of nowhere is going in the lending business? You think about why they just decided that they were going to start servicing the SME market, right? Put out the application or the I always forget what that is. What they put out an inquiry, a job. I don't know what it's called for to hire someone for that department. You ever think why that is? Why do I can't figure out what that is called? I can't figure it out. I don't know. I can't think of it right now. But you ever think about why they did that? Why did Ripple get into the lending business? Again, Craig Phillips is currently talking about the non-bank fintech space right now. That's what he's talking about. He's talking about, and now he's adding on to that the loan space and how it's outdated. Exactly what Brian Brooks intimated. He intimated that, why can't these non-banks, fintechs act in the way like banks and take some of the things that banks do and be able to do some of the things that banks do, like lending and loans. Again, this came out in 2018. Shout out to Mickey B. Fresh for coming across this. And Mickey B. Fresh is saying this has just recently been released. So this happened and they just let it out. The interview happened. It took place wherever it did. I don't know if it's on somebody's on their channel at the CFTC. I don't know. but it's just recently been released, according to Mickey B. Fresh.
Collection, payments, and wealth management advisory services, among many others. And the fourth and final area is we identified the need to allow for responsible experimentation in the private sector on a coordinated basis across regulators. Frequently referred to as a regulatory sandbox, we must sort of create an environment to incubate innovation responsibly across the various segments of the financial services economy.
You know, the more and more I listen to this, the more and more I tend to agree with BK. You know, who always is saying in his streams, his videos, that he doesn't believe the United States is falling behind, right? I've always said, I know that this current administration has a plan, and Ripple is involved in it, just don't know where it is in that plan. Again, this was released this interview took place in 2018. The executive order was thought about and started being put together in 2017. Kind of makes you think. It kind of gives some confirmation, right? That this administration does in fact have the plan. They're not going to let you and I know about it. They're going to hold it close to their chest, if you will.
Well, I read the report, and one of the things in there that I really liked, of course, is the discussion about a regulatory sandbox. This is something that the CFTC and Lab CFTC has been advocating and working with our partners on as well. And I just think it's really important it's an important concept for innovation. Maybe you could walk our audience through exactly what this is.
Sure. Regulatory sandbox is a term that was coined overseas, I believe first in the UK and later in Singapore. In short, it refers to a policy framework that relaxes specific legal and regulatory requirements for a fixed period of time, which allows financial institutions, possibly including fintechs, to experiment with innovative products and services. So how might this apply? Let's say a vendor has created a unique approach to credit scoring that provides an alternative to traditional methods and incorporates a wider set of data and employs artificial intelligence, for example. The target market for this product may be banks as well as fintechs. The concept of the regulatory sandbox would allow permissioning for the use of this new technology in a controlled and supervised environment. This would establish a proof of concept, but also create the means of validating the results and making sure they conform with other regulatory requirements, such as a range of consumer protections that's enforced by the BCFP.
Well, I got to tell you, this guy here doing this interview is asking some very, very poignant questions, very straightforward, that leads to some very, very intriguing answers.
In the U.S., due to our fragmented regulatory system, the successful launch of a regulatory sandbox by necessity must involve the coordination and support of multiple regulators. In some cases, is at both the federal and state level. A financial provider needs to have comfort that all regulators to which it's subject have agreed on an approach to relaxing the requirements in a consistent and predictable manner. This experimentation has to be, of course, sound and protect the interests of consumers and businesses as customers of the financial institutions. Likewise, after the trial period, there should be an appropriate mechanism to permanently implement revised regulations or guidance as appropriate. So Treasury recommended that financial regulators periodically review existing regulations as innovations occur and new technologies develop and determine whether the regulations fulfill their original purpose in the least costly manner.
So listen, I'm not going to play any more of this, guys, but I just got to tell you, wow, this is an absolutely great interview. So on Mickey B. Fresh's page, make sure you check it out for sure. Interesting stuff. Let's because I have to hop off here in a few minutes, but let's go over a little bit on the background. Just go through Mickey B. Fresh's page to get some background on Craig Phillips. Craig Phillips was the managing director at BlackRock prior to being the senior advisor to Mnuchin at the Treasury Department. You know what a senior advisor is to someone who has a political position at in the White House, like the Treasury Department? It's the right hand man. It's the guy who gets all the information is on the inside. It's in a lot of ways, in my humble opinion, a private public partnership. right? You understand what I'm saying? Mnuchin has the authority and the power to put something in place. He's getting his ideas on what to put in place from his senior advisor, if you understand what I'm saying. All right, so describing Trump's executive order. Yep, I remember we just listened to that. That was 40 seconds. Yep, remember, and exactly what I pointed out here as well. Just as he's taking some quotes from that interview. Treasury supports the OCC's efforts to launch a special purpose national bank charter. Again, 2018, this interview is being done. They just needed to put the right guy in place, put the right guy in the right place, if you will, to make that happen. And apparently, this is another quote. We haven't seen this one yet. We haven't listened to this one yet. It says the key is the level playing field. Treasury supports a level playing field. It keeps coming up. I don't know if this current administration got it from the people at Ripple or Ripple got it from the current administration when they were meeting at the White House. I'm not sure. But in any case, they are singing the same tune. Let's listen to this one.
Great point.
And finally, the key is the level playing field. Treasury believes that the level playing field is very, very important. So companies offering similar services should be subject to similar regulatory treatment for those services across level playing field. Treasury believes that the level playing field is very, very important. So companies offering similar services should be subject to similar regulatory treatment for those services.
Mickey P. Fresh is doing a little bit of XRP there. So yeah, so very, very powerful stuff, guys. And here is some more background. So Craig Phillips joins the Ripple board of directors. BlackRock, senior advisor to the Treasury under Secretary Mnuchin, joins the board at Ripple. What do you think that's about? Is that perhaps about a guy being able to get the information, be on the inside of what's going on with a prominent non-bank fintech that is making moves in the financial space? I think so. It's not about the money. It's not about being able to check in and clock in at 9 and check out at 5. It's about being there on the inside. So who do you think he's taking it? You think he's just going home at night and sleeping? Who do you think he's taking this information to? Like, who do you think he's taking that information to? Wow. All right. And so Craig Phillips joins the board at Ripple. And then there's another thing. This is the Business Wire article where he mentions it. And then again, here it is, former BlackRock and Morgan Stanley. Wow. Very, very powerful. All right, guys, listen, I'm going to wrap up this video like I did all my videos. I hope this has been very, very valuable to you. Guys, do me a favor. Give a shout out to Mickey B. Fresh for sharing this information. Wow. Thank him in the comments, if you will, for putting this out. I'm going to end this video like I do all of my videos and remind you guys of this. Old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.